Well, thank you so much for joining us as we have things up and running in Chicago. Let's take a look at our current trade, and then we'll get some analysis here in just a moment. Let's bring up the big board where we have the corn market opening up about a penny higher this morning. Right now, it's hanging on to very small gains of about a half cent. We're trading at $3.53 even per bushel. We have the July up 3/4 at $3.69 3/4 per bushel right now. And if you take a look at the soybean market this morning, we have the March contract on the soybeans now 7.5 higher at $9.84 3/4, and we have July now 7 1/4 higher. Last trade 10.05 1/2. And on the wheat trade, here we go with Chicago March wheat now trading at $4.26. That is 3 1/4 higher on the day. New crop July 3 1/4 higher as well. Kansas City has that March contract now quoted at $4.29 3/4, so that would be 2 1/4 higher, while July is 2 1/4 higher as well at $4.60 1/4. And in the Minneapolis market, we have the nearby March contract trading 3/4 higher at $6.09 1/4, while July is up a couple at $6.26 1/4. And looking at the cotton market as it stands right now, we are now higher again, 7 points higher on the March at 83.49. It had been up at 83.95 in the early morning trade, and then actually opened up a little bit weaker, but now it's firmed up again to the plus side. So let's come back to the main studios here and visit with our very special guest, Chris Swift of Swift Trading Incorporated.
Good morning, Marlin. Doing great. How are you this morning?
Good to have you back with us.
Good,
here.
thank you.
All right, thanks for coming in down the street here in Nashville. Appreciate that. I want to take a look here at the grain markets. Big movement in soybeans this morning.
Yes.
So what are you hearing? The squawk on the street
crush
out there. What are you hearing?
The crush. The crush has been higher for the last several weeks. It continues to be higher. We have large amounts of protein on feed right now in both poultry and pork that consumes a tremendous amount of soybean meal. So I believe a lot of it is just the crush, the sheer demand for the beans themselves.
And in that regard, I've heard a lot of concern about soy meal pricing, and that's related to Argentinian production.
And that is correct.
And they don't they market a large majority of their crop as soy meal?
Yes, they do. For sure, they have processing plants there, and they will ship a lot of it over into the Denmark area, where they also have large processing plants, and will crush it there.
So they missed out on the rain, didn't they?
They did.
In central Argentina.
They did, and that's probably giving a little bit of a boost as well, but it's still the undertow of it seems to be more the demand than anything else. So.
Now I'm hearing the big commodity funds, they're heavily net short in corn.
Correct.
And now they're heavily net short in soybeans too, and they're also very net short in wheat.
Right.
And so there is some talk in the trade that, well, they're all loaded up on that side of the boat, and they say it wouldn't take much in the way of a bullish news item to make them reverse out of all that.
Right, and it probably wouldn't. Anytime you're short like that and you have very limited downside to it, and corn and beans, both, especially wheat, corn and wheat, they both hold an intrinsic value to them that's somewhere north of zero. So the likelihood of them going tremendously lower in comparison to what they can go higher, there's a lot of difference there.
So conversely, that would mean, in my mind, that would mean all the commercials are pretty well net long then.
Yes, that is correct.
So they are snatching up the product right now.
They are, and they need it because of the sheer demand.
All right, so what's that doing to basis around the country?
It's widening it out just a little bit still, because everyone is working on the supply level. They can all go out to the farmer and say, you know, we've got plenty of supply on hand, so we're not going to really be offering any narrowing of the basis. And it's been a little bit too early to see any of the 18 crop yet be base price yet. So I don't think it's doing a great deal to it, but it's not narrowing the basis at all.
And I did hear a lot of talk about basis around the Gulf and the lower Mississippi Valley that had really been firming up here lately because the rivers upstream up north had all frozen
over. That's right.
There's no barge traffic up north, so something to keep in mind. There is a wide disparity, I hear. So, all right, well, Chris, we'll come back here in a moment.
Thanks.
We'll talk about our livestock trade. Thank you very much, Chris Swift. He's with Swift Trading Incorporated here in Nashville, and we're going to come back in just a moment. We'll see what's going on in the livestock trade. Remember, cattle open higher. We'll take a closer look here in just a moment. Well, we're back with you to take a look at our livestock trade on the beginning of a full trading week here. I'm Marlin Bohling, and I'm joined by Chris Swift, and he is with Swift Trading Incorporated in Nashville. And all right, Chris, let's take a look at our opening trades here on the cattle market.
Okay.
I want to get your thoughts on this.
Right.
When we opened things up, we were sharply higher on the nearby live cattle. Let's go take a look. All right, on the board, we have February still $1.50 higher at $123.40 per hundredweight. And we have the April contract now up 89 cents. We're trading at 123.62. June up 69 at 115.42 per hundredweight. So again, I'll point out the nearbys definitely leading the charge here. Does that look like bull spreading in your opinion, the way that's set up there?
Yeah, it does a little bit.
Okay, let's look at the feeder cattle market. On the feeders, we have nearby January up 15. That active March contract is now 48 higher at 146.08, kind of in the middle of our trading range today, which is roughly a little over $1 wide. April feeders now 53 higher at 146.60. All right, so talk to me, Chris, about the cash cattle market that established last week.
Okay.
We heard the trade ended up about, what, $3 higher than the week before.
That's correct.
Is that right?
123. Packers needed inventory. They still do. The demand continues to show. We noted at the very end of the week how the box level began to pick up just a little bit. It's steady money and sometimes a little bit lower money, but that box improvement is great, showing that demand is still coming in for the beef.
So a lot of people are very confused. Why, the week before, did we move everything on Monday and Tuesday? And then last week, what, we sold them all Friday afternoon? Is that when it happened?
And I don't know, Marlin. Just in all honesty, that is one of the most convoluted ways of trading I've ever seen in my life. But it's been that way all of my trading career and doesn't appear to be going to change anytime soon. So I think a lot of it just has to do with the packer wanting to run at a full capacity. And when he sees that he can't pull heavily on formulated cattle, he has to go to the open market to buy them.
Is it possible that late in the week, the packer realized, we have this big winter storm moving in over the weekend. We may have to shut down some plants. So they just wanted to get stuff done ahead of time before all that winter storm activity?
And it's possible, you know, the movement of cattle into those packing plants, they really didn't want to own a bunch of them and then all of a sudden them having still sit out there and not be able to move.
Well,
so
that's true too.
I'm not real sure what the scheme of what they were trying to do was, but clearly the snow has impacted some movement. But as soon as it's over with, which should be sometime around midweek, that we start some clearing off from that, then maybe we start to get things moving back the way they were.
So I did hear rumblings this morning that maybe at least 3 plants may be shut down, at least temporarily.
I remember you saying that, yes.
Yeah. Let's take a look at our lean hog trade here this morning and see how we're opening up.
Right.
So on the big board in Chicago, February still down 18. We're trading at 71.90. The April contract 8 cents higher at 75.58. And May is unchanged at 79.92. We're going nowhere fast here, Chris, in the lean hog trade.
No, but
what does that
the
mean?
lean hog index has been firming a little bit. The cash market's been firming a little bit, and futures did make some new contract highs last week. So they're still on the upper movement to it, and I believe this is just first quarter demand coming in and showing up for the hog market. The hog market is really lean and moving very quickly. Even the higher production is being absorbed rather fast, so we continue to see growing economies out there, and growing economies means more protein.
And 2 big reports this week.
Correct. Cattle on feed and
cold storage tomorrow,
cold storage, right?
Yeah, so we'll have to be alert for that.
That's
and,
right.
And the trade may get positioned ahead of those a little bit too. Well, Chris, thanks again for all the information.
Thanks,
good
Mark.
stuff. Chris Swift happens to be with Swift Trading, and he is based in Nashville. So, Christina, we'll turn the reins back over to you.
All right. Thank you, guys. Appreciate that.